Hi everybody, it's March 23rd, 2020. Today I'm coming to you from home because all of us at Legacy Wealth Partners are currently working remotely. And I just want to start off by addressing the very serious reality of the crisis we find ourselves in today. We know that the coronavirus is really taking a toll on the lives of everyone around the world in many ways. Our lives are uprooted, our emotions are certainly fried, and our financial security is now in question because of the economic toll that the virus has already levied on the global economy. And that's why we at Legacy Wealth Partners want you to know that we're here to be a source of guidance and wisdom. And with that in mind, I want to let you know that over the upcoming week, I'm going to be coming back to you with a series of updates to share with you insights that we're hearing from some of the largest investment firms around the world and what they see as the path ahead of us. I also want to tell you what some of the most successful investors in history are saying right now. I want to lay out some of the steps that we're going to be taking with our clients to implement the recovery strategy. But first, here's a reality check of where we are today. Stock market's been hit really hard over the last 3 weeks and now sits about a third lower than it was at its all-time high less than a month ago. But stocks have not been the only casualty in this sell-off, guys, because traditionally conservative assets have also been hit hard, including things like municipal bonds and investment-grade corporate bonds as well. So today, investors are naturally wondering, what do I do? How do I hide? Do I just sell all of my investments at this point and wait for this crisis to pass? On the other hand, we're hearing from people that are saying, this is a great opportunity. I want to invest all the cash that I have. And by the way, that's not just our youngest clients. We have some of our oldest clients asking those same questions too. So we have people at opposite ends of this spectrum. But what I can tell you is that in all likelihood, the worst of this crisis is behind us. Although we may not be through it yet, the bulk of it is likely behind us. And what I can also tell you is that we're going to witness the most significant level of government intervention and stimulus that we've ever witnessed in history. Because governments around the globe and central banks, the powers that be, are going to make sure that we recover from this crisis. And I can tell you that for the financial markets, just as violent as this sell-off has been, the recovery to a good degree will also happen pretty swiftly. So for those people that are thinking that maybe the right course is to just duck and take cover on the sidelines, what I can tell you is that inevitably you'll be forced to buy investments back, but at prices higher than we are today. Because guys, this is a reality of the world that we live in. In order for us to have enough money to fund our most important lifetime goals, like retirement and college savings, we need to have assets that appreciate higher than the rate of inflation. And we're in the lowest interest rate environment in history. Never before have retirees in history had to expose themselves to investment risk like we do today just to get by. And because of that, we know that it's important that retirees have a significant portion of their portfolio invested in the stock market in most cases. This is just the reality that we deal with. But I know this is a very scary environment right now. And here's what I can tell you as steps that you can be taking. Number one, if you're looking at your portfolio on a regular basis, please stop. It's not going to make it any better or any worse if you don't look. I can tell you that the people that are faring the best in this crisis so far that I've talked to are the ones that haven't checked their portfolio. The second thing that I can tell you that's really critically important in terms of your financial security, if you're already retired, is the most critical thing that we look at for all of our clients is the level of withdrawals from your portfolio on an annual basis. That has to be a modest level that can't rise to become a higher percentage dramatically in times like this when your principal value is declining. So that's something really critical to watch. And for all of our clients, that's something we do on an ongoing basis. So that's it for today. Again, I'll be back tomorrow with some additional insights. I want to thank you for taking the time to listen to me today. And again, we're going to get through this. It's going to be okay. It's going to be tough, but we're going to do it. Thank you.